The biggest stock that I don't want to get in front of right now is Oracle.
It was one of April's most controversial sell recommendations.
This year, they did $18 billion in revenue. Next year, $32 billion. The year after that, $73 billion, $114 billion, and $144 billion. That's almost a tenfold increase over 4 years.
Now it's one of the biggest surges the market has ever seen.
2 days before the earnings report, we triggered what we call a relative strength buy signal. Anybody who followed that obviously turned out to be very lucky.
Marc Chaikin addresses what's changed and what's behind his timing on Oracle and other similar stocks that could replicate this massive pop.
This is where I think there are hidden gems. There are two stocks that are not on everybody's radar screen.
Marc, so great to have you back on this show talking about the big news that everyone is talking about right now, and that is Oracle. Really excited. This is going to be a great conversation. A lot to cover on Oracle, including what's behind that massive near 40% pop this week and how you as investors can kind of play the market moves that are more than likely to come over the next few days and weeks on Oracle. We're also going to get into some other names that could see similar pops in the future, so stick around for those. That's towards the end of the conversation. I want to start today, Marc, by talking about what's changed. Oracle's had quite a year. What could be behind this big turnaround?
Well, Bridget, first of all, it's great to be here and love talking about timely stocks, particularly when the Chaikin Power Gauge rating would have been helpful for investors and traders alike. So Oracle is a very interesting 12-month story. The stock struggled in early 2025 because they missed earnings expectations in March. And that was on top of an earnings miss in December. But in March, they provided weak guidance. So the Power Gauge rating looks at earnings estimate revisions and how a company reports relative to expectations. But the third piece of the puzzle is guidance. And that's when the company says, here's what we see coming in the next 3 months to 12 months. And the March guidance from Oracle was not good. The stock was down almost 11% at that point in March of 2025. And there was a lot of skepticism about AI valuations and the economic uncertainties around trade policies. So Oracle, after that report, dropped 4% and then kept going down because of the April sort of slide in stocks in general. What's interesting about Oracle is that whereas most of the strong stocks that we follow, particularly in the software space, regained their bullish ratings in late April, Oracle didn't get a bullish rating in Chaikin Power Gauge until June. It had a bearish rating. So it would have kept people out of the bulk of the decline that started in roughly November of 2024. But the Power Gauge rating turned bullish in June of 2025. And then there was a very positive earnings report. This earnings report was just off the charts, and we can talk about what was so good about that report. But I'm interested in, what your readers have been saying to you, viewers, about Oracle.
Yeah, we have definitely heard from viewers since our report back in April when you were on and Oracle was actually on your drop list. This is what you were saying about Oracle back in April.
So the biggest stock that I don't want to get in front of right now is Oracle. It has a bearish Power Gauge rating. It's been in a downtrend for the last 6 months, way ahead of the market peak on February 19th. The analysts are cutting their earnings estimates. So Oracle is a big, big stock that is positioned in cloud computing. Maybe they're using AI, but everything that we do at Chaikin Analytics says this is a stock to avoid.
And that was a really popular video. Lots of people watched that one, and some people may have followed that advice and then watched this stock in the end of May, early June, have a complete turnaround and start going back up. That's when we really started hearing from viewers saying they can't forget the pain of selling in April only to watch the stock turn around, or really just questioning why this stock ever ended up on your sell list. So I think now is a really good time to address what's changed. Why have we seen such a change in Oracle over the past few months and really this whole year?
Exactly. And change is a good way to look at it. One of my stock market mantras is never put your feet in cement. So it was appropriate to be bearish on Oracle. particularly vis-a-vis stocks like NVIDIA and some of the other software stocks that were doing better at the time. If you look at three software-oriented companies, Salesforce.com, Adobe, and Oracle, they were all weak in that period between December and the April bottom. So that really wasn't the place to put your money because you would have been bottom fishing. And I think I've been quoted as saying bottom fishing is the most expensive sport in America. It normally doesn't pay off. So you have to be flexible. And when Oracle reported that really positive earnings report back in May, the stock started to take off and smart money started accumulating it. And that was the appropriate time to turn bullish on Oracle, in my view. The market was telling you you were right. So we look at how a stock's doing relative to the market in addition to the power gauge. And you really want the market to confirm your fundamental view on the stock. In this case, in May and June, turned bullish on Oracle and power gauge. And then the market said, yeah, we agree with you. This is a stock to buy. So there's a time for everything. And that was the time to buy Oracle. But before we get into the numbers, 2 days before the earnings report, we triggered what we call a relative strength buy signal in Chaikin Analytics. Oracle, which had been outperforming the market, dipped below its 21-day average and then moved back above it after getting oversold. And anybody who followed that obviously turned out to be very lucky. But the point being, in every stock, if you do your analysis, power gauge, relative strength, Chaikin money flow, those are the only three things I look at. And then these signals, you'll get some really interesting entry points.
Yeah, I think this is so interesting. Such a good conversation and really about the fundamentals of how you want to invest. Do you want to be the bottom feeder who's looking for the lowest entry point to get in, or do you want to wait until they're getting more of that bullish momentum before you get into a stock? And that is the theory behind power gauge and Chaikin Analytics in general, right?
Exactly. And most of the time, that's a really effective approach. There are going to be times, particularly coming out of a bear market, when you have to modify that a little because at the bottom of a bear market, very often the weakest stocks have the best performance because they've just been overdone and there are still short sellers in them. But in general, I'd say 80% of the time, what you just described is the right way to make money on a consistent basis. So why don't we delve into what Oracle's doing, what's changed, and what those numbers were that blew people away.
It's incredible to see a company the size of Oracle see the jump that it had. A 40% jump on a massive
I
company
mean,
is
yeah,
just not something you see every day.
in terms of Oracle since 1990. So the excitement around Oracle centers on the fact that it's positioning itself as a key enabler of the AI infrastructure build out. And we've talked on this show before about the construction and engineering companies and the power plant builders who are doing the essential picks and shovel work to get AI infrastructure built. So Oracle's now competing directly with Amazon, Microsoft, and Google's cloud services. So what Oracle said on this conference call was that they call them cloud infrastructure revenue. It's really, hosting applications AI in the cloud, which Microsoft and Amazon have been doing for years. And they say that this year they did 18 billion in revenue. Next year, 32 billion. The year after that, 73 billion, 114 billion, and 144 billion. That's almost a tenfold increase over 4 years. It's staggering for any size company, whether it be Apple or NVIDIA. But for Oracle, which has been a tried and true stodgy software database provider for years, this is a game changer.
I think when you see as an investor, you see numbers and guidance like that, it just seems almost too good to be true. You have to question it a little bit, going, is it really possible for this company to see that extreme growth in such a short period of time? Does Oracle, did they have the contracts and the records to really show, yeah, this guidance is real and this is actually a real look and outlook of what we expect to see for revenue coming in?
Well, that's a great question. So to do that, you look at the backlog. And Oracle's backlog has soared almost 350% to 455 billion because they've signed some very, very large contracts with different customers rumored to be Open AI and Google. This is all part of the AI revolution. And the build out to support that revolution is where the next phase of money is going to be made. So Oracle has positioned themselves right in the middle of that. And because they're not as big as Google, Amazon, or Microsoft, the growth percentage numbers are staggering.
Yeah, it's the kind of growth story that I feel like you can't necessarily compare it to NVIDIA, but it's just such a huge turnaround for a company because you're wondering where were these numbers? Where was this kind of guidance back in March and April and earlier in the year and that December report that where they missed on earnings and that guidance wasn't there? Is this just all a result of a really big pivot for Oracle or what accounts for this huge change in future outlook?
Well, I think it is a pivot. Larry Ellison, who founded the company and is still there, is, a legendary entrepreneur. I too would question these numbers, except they came from the CEO. They're not coming from Wall Street analysts. Now, the CEO of the company signs off on the financial statements along with the CFO. He's got commitments. Now, those commitments could be canceled. Let's assume something happens to AI along the way, regulatory problems, some sort of glitch that looks like it's threatening nuclear um, annihilation because the machines took over, all very unlikely to happen and not at all in line with my view. But there's anything can go wrong in life. That could change these projections. But for now, these projections are going to hang over like a big ray of sunshine over Oracle. The dark clouds have been driven away and they've been replaced by a rainbow. And it also has implications for other people, like the people who provide chips for Oracle, because they have to build out infrastructure capability.
Yeah, I think that's what a lot of investors are looking for now. So if you weren't in on Oracle before this huge spike, what's that next AI company that could do the same? Because Oracle isn't the first one to have a big jump in just the last month. We saw Broadcom also have a really giant jump that you just don't normally see. And so I think investors are kind of looking out for when is that next AI company going to have this 15 to 40% spike overnight?
Well, interestingly, Broadcom is rumored to be a chip supplier to Oracle. It's not just NVIDIA selling these chips, Bridget, and you pointed that out on the show. There are a lot of other smaller semiconductor companies that are benefiting from the AI revolution. But interestingly, Broadcom had a bullish power gauge rating, been outperforming the market since May. Chaikin Money Flow shows persistent accumulation, meaning the smart money just buying it day in and day out. And they reported a blowout quarter. And there was speculation that they had two new customers for their chips, OpenAI being one of them, and possibly Oracle. So when Oracle made their big guidance leap, Broadcom, which had already spiked up 3 days before, took another leg higher because Broadcom is likely to be participating in the booming growth of Oracle's data center cloud infrastructure revenues going forward.
And Broadcom certainly has a bright future alongside Oracle. They're kind of moving up together, like you said. Are there any companies outside of just chip makers that could benefit alongside Oracle's, big rise and that huge guidance they have for the next 4 years? Are there other companies outside of the AI infrastructure that could also benefit?
This is where I think there are hidden gems, and they're in an industry group that we categorize as construction and engineering. So there are two stocks I can highlight that have extremely strong fundamentals because they're building data centers and they're cooling them. So the first one is EMCOR, EME, big construction management company benefiting from all this build out, bullish power gauge rating. So how do you find them? You find them with the power gauge. And then you confirm with relative strength, relative price performance that the market agrees with you. So MCOR is a very solid beneficiary of the AI infrastructure build out. And then Comfort Systems, symbol FIX, air conditioning company, but it's not air conditioning for your home or my home. It's air conditioning for factories. And they're using AI to sort of fine tune the loads and the cooling cycles to save energy. So there are two stocks that are not on everybody's radar screen. They've both moved up nicely, so they're in strong uptrends. But any pullbacks in these stocks, if we do see a correction, and right now the hopes of a Fed rate cut cycle beginning next week are completely overpowering the seasonal tendency to get a 5% pullback into October. But if we do see that pullback, stocks like MCOR and FIX are really where you want to be putting your money, in addition to some of the tech favorites we talked about.
Thank you for sharing those two other names. They're names we've never covered on the channel before, and it's always good to hear of these hidden gem companies that could benefit right alongside these big pops that we've seen too. You are really known for finding these kinds of hidden gem stocks before they pop, and I know you're going to be sharing a lot more of these kinds of stocks and insights at the Stansberry Research Conference in Vegas next month. This is a quick invite to all of our viewers who watch Mark and our channel every month. It's a chance to meet not only Mark in person, but I will also be at this conference next month, October 20th through the 22nd in Las Vegas, where Mark and a large panel of other research experts are going to share a ton of market insights and some hidden gem stocks just like this one. So if you're looking for a little getaway or truly a little stock market retreat, I hope you will join me and Mark in Las Vegas next month. It's going to be a great time. I hope you can join us. I want to get back to Oracle's big pop and those who are on the power gauge system, even though back in April, power gauge said, get out, this is a falling knife right now, not a good thing to be in. What did it say just earlier this week before this big pop for Oracle?
Well, I point out that it was saying stay out of Oracle back in December of 2024. So in April, that was just a culmination of months of underperformance. The power gauge turned bullish in June on Oracle. And then right before the earnings, we got that relative strength buy signal on Oracle. So if you were following the power gauge, Oracle was one of the stocks that you would have been alerted to beginning in June, and then with a what we call a relative strength buy signal just 2 days before earnings. So, the power gauge is not just a quantitative model, it's a complete package of the model, charts with relative strength and Chaikin money flow, and signals. And that's really what you need to be a good trader or a long-term investor. So we're catering to both of those demands in the marketplace, and Power Gauge has done well for our subscribers.
Yeah, I've been able to explore the power gauge myself a little bit over the last half a year or so that we've had you on the channel. And there's so many great insights in there that are very easy to use. I've really enjoyed looking at them every month. If you want to check this out for yourself and just see all of the automatic alerts, the automatic insights, and really easy indicators to know when to get in to buy, like before this Oracle spike that we had this week, you can scan the QR code now or click the link in the description of this video to check out the power gauge system for yourself and see how it works for you. All right, Mark, before we go today, I had one other question for you to kind of end the conversation on Oracle. And that's what the power gauge is saying right now after this massive rise in Oracle. Do you want to, as an investor, get into Oracle when it's seen such a huge spike? Or is this a wait and see if we see some volatility after such a big rise?
That is the right question to be asking, Bridget. The power gauge is bullish, but the stock is very overbought. So at a minimum, you want to wait for a 5 to 8 day pullback in the stock before you'd even consider buying it. And ideally, if we get a pullback in the market, you'll see some sort of profit taking in Oracle, and that's your entry point. And at that point, you want to probably buy it and stay with it for this full cycle that they've projected out. I mean, this could be a great long-term holding.
Very good discussion today, Mark. I so appreciate your time and going through, again, this company that everyone is talking about, and we wanted to make sure to talk about it too. Thank you, Mark, for your time today. And thank you for watching, everyone. Let us know your thoughts in the comments. Were you in on Oracle ahead of this big spike? What are your thoughts on what this stock has done over the last year? We'd love to hear from you. Thanks for joining us, everyone. As always, happy investing.